Good morning. It's Thursday, February 13th, about 5:30 a.m. Central Time, the day before Valentine's Day. So, you think if I gave my wife this 10-ounce silver bar, told her it was worth 320 bucks, but it could go up to 500, she would appreciate it, or she would just use it as a paperweight and go in a drawer and never to be seen again. So that's what I always wonder. The question is, how do you monetize something like this? Do you end up holding it? Because I know too many people in 2011 went up to 50 bucks and, they held the physical, and then it comes all the way down and we end up back in the teens again. So remember, silver is really a cyclical metal. I know people argue all day long about it and everything else. They got a lot of emotions tied to it. They do hold a lot of physical. They do put a lot of their net worth in it, but it's like, how do you cash in on this and change your life in some capacity? That's what I always have to wonder. That's why I think having a futures trading account along with holding the physical makes sense for that, for the quick in and out as far as the liquidity is concerned. So I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So I'm going to take a look at the precious metals markets, get you ready for the futures commodity trading day ahead. So looking at the precious metals overnight, they are higher. It's green across the screen here in many of these markets. And this comes after the sharp reversal following yesterday's hotter than expected CPI data. It pushed out the expectations for interest rate cuts, where it was supposed to be in June and then it was supposed to be later in the end of the year, and really just pushed it out to the end of the year. So they're expecting, many of the analysts, just one cut in December, which that could even be pushed out. In many other banks and large financial institutions are just saying no interest rate cuts. So what that does is it creates this stagflation environment. I mean, there's a lot of talk about inflation, eggs being $7.50. I don't know if that's for one or a dozen. What's going on? I don't eat eggs, so it doesn't impact me. But the point is that if you're going out and you're spending money, that the inflation, especially on the food side, is there. It will impact people's spending and it will take down the growth and things like that. That's where you get the stagflation, and that's where you get one of the best performing economic cycles here as far as gold is concerned. Now, going back to yesterday's CPI data, what I'll do is I will write down the lows or the highs, whatever was really meaningfully impacted on any of the asset classes I'm looking at. And I'll consider that my new line in the sand or your edge case here going for the rest of the week. So yesterday on gold, 28.8650, I'll write and circle that down on the charts. And then also on silver, 31.87.5. I'll either circle it, draw a horizontal line on my chart, and have it stick there permanently. So looking at the, a start on these commodities here, one thing that I do want to address, one of the weaker commodities out there is the crude oil market, down about 1%. So let's take a quick look at crude oil and some of the headlines that are moving some of these markets. So President Donald Trump, he agreed to a phone call with Russian President Vladimir Putin and started negotiating the end of the Ukraine war. Trump revealed in the conversation saying that he had a lengthy and highly productive phone call. He said that his teams would start to work on the negotiations immediately, and he later told reporters in the Oval Office that he planned to meet Putin in Saudi Arabia in the not-too-distant future. So the reaction function was, you get crude oil prices falling about 2.7%. They fell about $2 here, raising speculation that those risks to the Russian supply may ease, and that U.S. sanctions on Moscow's oil sector, that's what's really disrupted the market, that could ease as well, and it can kind of underpin some of these gains that we've seen in the oil market here recently. Now, on the flip side, something that nobody's talking about is that there was another story, and this is your risk reversal catalyst here, saw it all over the Bloomberg terminal on a few different sites and trending on Twitter, is that Israel is likely to attempt to strike on Iran's nuclear program in the coming months in a preemptive attack. So the warnings about a potential Israeli strike included multiple intelligence reports spanning to the end of the Biden administration, the beginning of the Trump administration. So, a close look at the crude oil market, it definitely has broken back down here. If you were going to take short positions, you could see that a couple days ago, that high there, that's kind of your first line in the sand. And then once, if it does close down at this level, the trend will shift to bearish, and about 75.70 is going to be your trend reversal point to start off with. Now, another thing that happened once the discussion about the end of the Ukraine war occurs is what's it going to take to rebuild that area there? And well, it's going to take a whole lot of copper. So we saw copper rise to its highest level in 3 months as those talks between Russia and the U.S. to end that war in Ukraine had really driven that risk appetite here and took the dollar index lower. That's where your copper, your infrastructure plays start to go up a bit. So copper has had a strong start in 2025, up about 8%. There has been resilient demand growth in the global markets here and lingering supply tightness. Remember, to bring on a lot of these mines and to bring them up, it takes quite a bit of effort, takes a lot of money, things like that. That's why if you look at the production levels on a lot of these gold mining stocks, and then these miners, they've really started to come down a bit. They face a lot of challenges and headwinds. A lot of these stocks have declined while the underlying metal, you look at things like Barrick Gold in Newmont Mining, they have come down a bit as these markets make new all-time highs, and it's because of those inflation costs. It's because of rising employment, rising insurance, rising costs for different variables going into it, like gasoline, crude oil, and things like that, machinery and everything else, quite expensive given here. So pushing on here to the overnight ranges in the gold and silver market, what we're all here for. You do have a high in the gold, 29.50.30. The low of the overnight session, 29.25.80. So what I'll do is I'll look at what was the record high in the gold market, and I'll write that down. 29.68.50 was that high in the gold market. So that would be your all-time high. About 15, 20 bucks off from there. Could be easily achievable. We got a few things coming out that could define that. Now, on the silver market, the two levels that I'm really going to write down, again, is going to be that low from the CPI, which is going to be 31.87.5. And then I'll write down what the high was just recently, which was about 33.21, 33.18. I can't exactly remember, but you look on the charts here, basically we've come up, we're consolidating sideways. We got some choppiness with some ranges here, and it looks like we might be able to break out to the upside, or we're going to fail and push back down and retest 32.30, 32.03, 31.88, all those different levels that I give you here as your key support levels. Now looking at the fund flows and ETF flows, we're seeing exchange traded funds. They added about 91,000 ounces of gold to their holdings in yesterday's session. So they are clearly buyers of the dips in these markets here, bringing the net purchases to about 1 million ounces, and this was a fifth straight day of growth. ETFs on the silver side added about 21,000 in their holdings here in the last session, bringing the net sales this year to 15.8 million ounces, third straight day of growth. So it just tells you that the buy the dip mentality more in the gold market. Gold is one of the strongest performing commodities out there, and also coffee is the other strongest performing commodity that I see from a relative strength standpoint. And looking at the charting, different software I use, different algorithms and programs tell you that those are kind of the two key commodities out there. Lean hogs also pops up on those charts here as well. But getting back into it, there was a story that I discussed a few days ago, which was the insurance companies in China are able to allocate about 1%, it's the top 10 insurance companies, of their capital towards gold to diversify against that portfolio or the property sector and things like that. So that's where I think that this buy the dip really is very firm on the gold market at the moment, because of the fact that they are a little bit more price sensitive. They want to buy any kind of correction that they get. So you're going to see, I think, the underlying downside a bit supported in the gold market. Not a formal recommendation. This is just a discussion with the public here about people and anyone who sees this video. So taking a look at some other things that you do have to focus, because remember, when you trade commodities, it's not just one thing. It's everything, and it's the particular of everything. So we're seeing the dollar index here continuing its sell-off. So when you take a quick look at the FX, we're seeing the euro rise. We're seeing European stocks rise to a record high on optimism of that U.S.-Russia trade talks. That could be down the road here, but the ending of the war there. And then we're also seeing the British pound. It's rising as we see an unexpected economic growth at the end of 2024. So the pound rose as they registered this surprising economic growth. It was our GDP. It rose 0.1% in the fourth quarter, and it's an acceleration from the performance in the third quarter. So it's better than the expected data readings here. So what does that equal? You get a stronger euro. Remember, that's 54% inverse relation to the dollar. And then you get to British pound, which is another large chunk as well. So you got basically 2/3 going against the dollar. So dollar comes off, gold market starts to go up and things like that. So a couple things that we're going to be watching here today. Yields and treasuries. We saw treasury yields edge higher after the biggest sell-off in December. So bond markets, they really are going to focus on that PPI data that we're going to look out here today, and also the 30-year government bond auction to gauge whether yesterday's sell-off in the bond market, the push higher in the yields, is really justified. So what I'm going to be monitoring today is going to be reciprocal tariffs. Let's look for that talk. Are we going to get that all-time high in the gold market? And then finally, the PPI data, initial claims, and the 30-year bond auction. So Trump, it looks like there's more discussion that he might be announcing this type of reciprocal tariffs because there's some movement in the markets right now. So you guys got any questions? Give me a call, 312-858-7303. You want to open up a future trading account with Blue Line Futures. Got to register for the link below. Start getting some of our research, things like that. Shoot an email to info@bluelinefutures.com. Tell them that you want to get the account documents. We'll send them out to you. A lot of people open up accounts left and right over here to trade the futures markets, whether it's the agricultural markets, they want to set up some hedging program, whether they want to speculate in the cryptocurrencies, which have broken down recently. But the 27 major commodities, they have been movers and shakers, especially in 2025 and the start of the Trump administration. But got any questions? Give me a call, 312-858-7303. Remember, futures option trading, it does involve risk of loss, may not be suitable to all investors. Good luck, good trading.